Hi, everyone. Welcome to the second episode of Fintech with Fries. I'm here with Julian Wells, and we're live from Money 2020 in Amsterdam. So there will be a bit of a buzz. There might be some interruptions because we're sitting at the lovely Fintech North stand. We're there together and representing the fintechs in the north of England. I'm sitting here with Julian Wells, who actually needs no introduction. I think a lot of people in the fintech ecosystem already know him, but I'm going to do it anyway. So he's the director at Whitecap Consulting, and he focuses on financial and professional services. And I'm reading from my notes as well, because we're at Money 2020. My brain might wonder, and Julian will have the same thing, but we'll make this as insightful as possible for you. He's definitely focused on kind of emerging areas within fintech and legal tech. He's also the original founder of Fintech North. They've got a lovely team now. They do a lot of great stuff in the north of England. So if any of the events, definitely try and attend. It's great to network there. He's also I'm based in Bristol, and he's also on the board, which is another lovely regional fintech ecosystem to engage with. And then he does all kinds of other things, including what we'll be talking about today, is mortgages in the UK, and specifically focusing on the technology that is applied to the mortgages sector. Because Julian has also done his PhD, and he's passed his Viva as well recently. So congrats to you again on that. That's a big step. As a partner of a PhD student, I know how tough that is. Let's without further ado, let's dive into kind of the. I don't think I need to introduce myself. I'm a product marketer at Lenvi. Obviously, if you've been to one of these before, you will have seen me, and you'll see me fly by on LinkedIn. But Julian Wells is the star of today's show. In terms of the current kind of macroeconomic setting, obviously I think no one that is listening in needs to have a recap of what has happened in the past few years. There's a lot that has happened since 2022 specifically. Obviously, we had COVID in 2020. That had a massive impact. So the past 5 years have been tumultuous, to say the least. In 2020, kind of the landscape kind of drying up in terms of investments in technology. So fintech was the darling sector of venture capital. That kind of dried up in 2023. There was a lot of reckoning and realizing that we really have to focus on what's working, what's not working. We can see that at Money 2020 as well. There's a lot of talk about innovation. You can see that changing landscape if you've been to Money 2020 before. Now, in terms of mortgages, affordability, rising interest rates, all of these things that have happened since 2022, they've had an impact. We see some of those trends kind of changing now, only recently. So affordability and the Consumer Duty Act, all of these things are super important, and technology can be applied to those things to make it flow more seamlessly for consumers through lenders. So that's some of the things we'll touch about. Now, there is always an icebreaker question that we ask in this Fintech with Fries series, and that's: do you prefer fintech, French fries, or do you prefer fintech? Do you prefer French fries or chunky chips, Julian?
French fries for me.
French fries.
Yeah.
It's a good answer. I mean, to be fair, chunky chips, Flemish chips is what we call them in the Netherlands. So I'm Dutch, and we're here in my home country. We do prefer a bit of chunky chips, but French fries there's some great places in Amsterdam.
I could have gone either way. It was a close
French
call.
fries. Yeah, it's good. So in terms of kind of, let's dive into and kind of look at the kind of more macroeconomic environment within mortgages specifically. And how do you see how these recent kind of economic changes since like 2020, 2022, how they impacted the mortgage market, and what are your predictions for kind of 2025 and beyond?
Yeah, like you say, it's been a pretty tumultuous time for the market. COVID saw interest rates go really low. Massive move towards fixed rate mortgages during that time.
Yeah.
Some people took out long-term fixed rate mortgages, which was understandable. Some took out shorter-term fixed rate mortgages. People that took out a really low 3-year fix in 2022 are obviously now going to be adjusting to a higher interest rate. So there's quite a lot of narrative in the market about what will happen to those people. Some people will get a bit of a payment shock. And so there's that's leading to discussions around vulnerability and how lenders are going to deal with that, whether there'll be an impact. I think the market's always been very competitive. So whatever's going on, no matter what the lending volumes are that you're seeing overall, you've always got lenders vying for positions and for business. And so the pricing side of things is always really key. And that'll always be a dynamic no matter what's going on in the economy. I think the sector's kind of gone through a period. it's gone through a period of modernisation and continues to go through a period of modernisation. And I know we're going to talk quite a lot about tech today, but that's also true of regulation as well. And we're seeing that sort of continual evolution of the regulatory regime in the UK, and I think that's going to affect the mortgage market too. The simplification of regulation, and I was actually at a talk earlier on today where Colin Payne from the FCA was talking, and one of the other speakers made the point that we're not deregulating in the UK, even though we are sort of consolidating some of our regulators and changing things. But what we're doing is applying a more proportional approach to regulation across the market, and I think that's going to enable more competition. So we can expect that to be the case in the mortgage market as well.
Cool. And do you think that in terms of these trends that we're seeing, and obviously the FCA in the UK, the regulator has been very open to innovation, and technology and fintech obviously is kind of a big sector if you compare it to other European markets. How do you think lenders, like bigger lenders, but also building societies, are they adopting kind of quickly enough to this evolving economic landscape? Do you see there might be a gap there between what is happening in the fintech sector and kind of the larger lenders, the more incumbent lenders?
I think you've always got this dynamic around speed of change and regulation, and any regulatory change is not optional for lenders, no matter what size you are. So everybody's got to adhere to whatever the regulatory changes are. And what that means in all mortgage lenders is that has to be the priority. So when you're looking at tech roadmaps and you're looking at innovation, like product development and exciting changes you might be able to make, and then you're looking at regulatory change that's mandatory, all the resource has to go first and foremost towards the regulatory change. So it'll tend to slow people down a bit. Regulatory change can be a lot harder for larger organizations, so it can be more of an issue for them. The smaller lenders will tend to be a bit more agile. They haven't got the sort of historical customer base necessarily to deal with and manage through the process. So
and obviously managing risk in that case as well. If you're a bigger lender, there's more risk to manage. There's more, as you say, more customers already on board. There's larger loan books to deal with, and I guess that's an interesting kind of going into kind of the technology bit. So we've talked about regulation. I think we'll talk a bit more about that later on as well. But I guess if you look at this, the adoption, so you've got new players emerging, you've got various kind of maybe non-bank specialist lenders there as well that might have one financial product. What are you kind of seeing in terms of innovative technologies that are emerging in the mortgage sector, like digital mortgage platforms? There's digital brokers as well now. You've got the Habitus of the world, the Tembos of the world. And also then obviously the buzzword that needs to be mentioned, AI, and how AI is applied to that. And I guess also how does that, so we've got the technologies, but as you say, also you mentioned the tech roadmaps that lenders might have, but also the product roadmaps, right? So there's financial products, there's different types of mortgages emerging. You've had Help to Buy in the past, but now there's talk of like 100% mortgage, like you no longer need a deposit, all of these things. How do you see those two kind of combine as we move on from 2025?
Yeah, so I think when you look at the mortgage market, it's dominated by a small number of really large players. I think it's around 70% of the lending is going through those big six. Those guys are doing high volume prime mortgages that are, like, if we sort of generalize, they're fairly simple to process, so it can be done in an automated fashion. And so those large lenders are looking at process efficiency, looking at the adoption of AI, data, APIs, online systems. So all of that's taking place. But there's about 340 organisations in the UK that are registered to submit, that have to submit returns around mortgage lending. So you've got 340 mortgage lenders, but the top six are doing 70% of the lending. So when you look at the rest of them, hardly any of them are focusing on prime markets, and certainly not exclusively on prime markets. So there's a need to be a bit more specialist, a bit more focused, look at niches, and over time, that's like the PhD you mentioned, the DBA that I've just done, that looked at the impact of technology and innovation on new entrant mortgage lenders, and I looked at 45 different mortgage lenders that had entered the UK market over the last 20 plus years, and pretty much all of them were specialist lenders. And historically over time, what you saw was people coming in as specialist lenders, using different funding mechanisms in order to access specialist funding markets. And so they weren't necessarily banks with balance sheet lending. They could use wholesale markets. They're using securitization through lending and mechanisms like that. I think with the newer lenders that are coming out today, they are increasingly tech orientated. So 10 years ago, a new lender needed to have the expected tech in the market, but they could be differentiating on product. I think now what some of the newer lenders that are coming through, they're building their tech through fintech partners and platforms. It's integrated with through APIs with some of the more advanced data services around things like AML, open banking, etc. So they're coming to market with a really streamlined process. And if they get that right with the product focus and a product niche as well, then it's really powerful.
Yeah, definitely. And I guess that's one of the things that we kind of touched on in terms of then, all of these new processes, the new lenders coming in. I vividly recall a chart by the Bank of England. I think this was research done in 2022, but it's kind of buy-to-let lending. Obviously, that's the bigger one. I think that's kind of emerged quite a bit over the past 20 years. I'd say you can see that growing as part of, you've got residential mortgages and you've got commercial mortgages. Buy-to-let was a big kind of financial product that was growing, and it seems to have plateaued now. And I guess that leads to my next question, and also what you said in terms of, beyond these kind of more traditional mortgages, do you see any other financing models emerging as well? So we've got, obviously, affordability is still a thing. Yes, kind of wages they're countering that now, so wages have grown a bit more. Interest rates are coming down, so that will probably be less of an issue in terms of affordability. But there's still a lot of people out there that can't really afford to buy their first home, or maybe they want to move on from, they're moving from one city to London or to another slightly more higher priced area. And then you've got, shared ownership, like these kind of models. They've been around for a while. Do you see any other kind of, not just for the shared ownership, but for affordability, flexibility within tech? Do you see any other financial products that are emerging right now in terms of the mortgages being offered?
Yeah, there are. So there have been some quite significant changes. I mean, just quickly touching on the buy-to-let point. The buy-to-let market grew rapidly. Was a focus for a lot of new lenders because it's not regulated in the same way as residential, so it's an easier market to enter. So a lot of new lenders were starting in buy-to-let and then broadening out into other markets and more broader residential. There's been some changes to regulations around the way that you can kind of let properties, which have caused some challenges in that market. But in terms of new niches, I think like all markets, the mortgage market has to evolve in line with the way that the needs of the population are evolving. People are, as it's well known, people buy houses later in life. Now houses are more expensive. It takes longer to pay off mortgages. There was a stat this week that I think that it was something like the average first-time buyer is taking out a 30-year term. So something like that. It sounds a lot, but it actually sort of makes sense when you look at all of the dynamics that are in play there. In terms of sort of new and different products, I wouldn't say that I currently see radical changes in the types of product being offered. I think product innovation in mortgages has always been difficult. There have been some quite high-profile sort of success stories, like Gen H, for example, which is helping first-time buyers, and they've developed a brand that's become very well known and respected in that space. And then they're working with other lenders at times where other lenders are giving them funds, and then they're helping to originate those funds. And so there's some I guess some stuff going on in the background where lenders are looking at different ways of funding the loans they originate, and sometimes they need a different brand or a different vehicle to originate what they want. To be honest, that kind of thing has been happening in different forms for as long as I've been working in mortgages, which is 25 years from this year. So I don't see radical change at the moment. I think it would be interesting whether that does start to happen. We've got new legislation coming in around data, the data use and access bill. That may open up some more sort of integrated financial services products across not just mortgages but other forms of lending, wealth management, savings. I don't think we're not about to see that have a big effect imminently, but it could have quite a big effect depending on how it comes in. And then I think there's, you talked about 100% mortgages earlier.
Yeah.
When the market demand has got demand for 100% mortgages, you tend to see creative solutions where lenders can team up. So you have a first charge lender that'll do the majority of the loan, and then maybe create a partnership with a second charge lender or some other lender that'll do the difference. So it adds up to 100% for the consumer, so they get what they want, but doesn't necessarily all come from the same place.
Definitely, I think that's a nice. It's a nice kind of step towards kind of digitalization. And I think, as you say, the financial products, they're there, but the more important thing within mortgages is kind of technological innovation, right? So it's kind of how do you digitalize this experience, and coming to that point of, if you have a first charge and a second charge lender, there's all kinds of complexities in terms of the tech and at the back end. So like technology needs to transform that, but how do you see that then transform it for the rest? So we've already seen digitalization transform a lot of the mortgage processes, fintech in general, and obviously change, especially given this market is dominated by 6 lenders that are 70+% of mortgages, and they've got loan books, 30-year. I have actually a 30-year mortgage. I think we have a 35-year mortgage as well now. And then it popped up the question. Sorry, just an icebreaker moment in between. Popped up the question: you will retire or something like that by that point? And it's like I had to think about my retirement when I'm actually getting a mortgage now. And I'd like to think I'm still young, but maybe I'm getting old. Who knows? From like online applications and kind of getting approvals and digital contracting, all of this like payment processing as well. There's account payments. There's all these kind of fintechs that are now matured. So the Monzos of the world, the Money Boxes of the world. Kind of some speculating. Starling Bank is already in mortgages, I think, to some extent, and Monzo obviously will probably go into this space as well. Moneybox already does a lot of stuff for first-time buyers in terms of education, but also kind of helping with the broker side of things. How do you see that kind of working? Let's use the example of the 100% mortgage, right? Just in terms of there's a 100% mortgage, there needs to be different lenders involved. There's a UI experience for the consumer, but then at the back end that's more complex. But because if there's 2 lenders, you can't really show that in 2 separate apps, or you can't really show that in 2 separate kind of balance sheets or whatever you want to call this, and how you portray this to the consumer. So who do you see sitting at the front end there? In terms of, is this a fintech potentially, and then 2 big banks in the back providing the capital, and the fintech kind of taking care of the UX in the front end, and then in the back end there's all kinds of complexities of the back office. How do you see this with the technology, and how is technology applied then? Yeah,
I guess you've always got the as we kind of alluded to a little bit earlier, you've always got the balance between what's possible through technology, where like a perfectly smooth user journey that just kind of combines these 2 lenders. That sounds nice and easy, and then you've got to balance that with what's okay from a regulatory perspective. The regulatory journey that someone has to go through to take out different products with different lenders. So I'm not entirely sure how seamless that could be. Actually, it might. I mean, it might be possible, but I think that could be quite complex, and you'd have to be confident that you were going to get a volume of people going through that makes it worthwhile building the technology. I think more broadly about the way that the mortgage process is evolving. I think what we've seen is the emergence of digital brokers over recent years. Some very successfully, some kind of maybe not proven as successful as they thought and hoped. But that modernization of the earlier parts of the process has been happening, and the digitalization of the mortgage application process is a thing. When I started working in mortgages, we were doing decision in principle via fax. It's that makes me feel really old. Right? People
You're still young too. It's fine.
So that's all moved on. You wouldn't do that now. Everything you fill out an online form for a decision in principle. But from a mortgage broker point of view, you're like right at the start of the journey when somebody's got a property and they're applying for a mortgage, and you're capturing data. And obviously, in the ideal world, that data goes straight through from the mortgage broker's CRM and onboarding process into the decision in principle, into the application process. The lender goes through to completion, and it all works. And then you've got other things happening in the middle there, like sourcing platforms, etc.
Yeah.
Affordability checks, integrations for address checking, etc. So we're kind of in the throes of that all ironing itself out.
Yeah.
And it all depends on who's got which tech, which integrations, and which capabilities in place. But all of that process is becoming digitized. It means that the challenge for everyone involved in it is how do you optimize your role in the process?
Yeah.
And how do you make it as efficient as possible, and like how do you make it as easy as possible for the consumer or for the broker if you're a lender trying to attract business from brokers, but also how do you just manage the process as effectively as you can? How do you make sure you got the right data, that you verified the data, you're not asking for the same thing twice, you're not waiting for things where you don't need to, you've not got underwriters sitting around, and that's where some of the new tech's really helping.
Yeah.
The hard thing for lenders is how do you adopt it? Like, what's the right way to do it? Things like the use of AI in the mortgage application process and the underwriting process.
Yeah.
There's some really clever tools that are starting to emerge now that can save like significant amounts of time for an underwriter in the way that they're processing and checking application data. But adopting those and embedding them and trusting them and getting the sort of compliance department comfortable that that's going to work. That's the bit that everyone needs to go through, and it's not going to be as quick as it could be. The tech can do it, but whether the regulatory environment, the sort of running a lending business, whether you're happy to
and kind of embracing that technology within bigger or smaller lenders, it doesn't matter. Like as you say, the trust is key in that case. It has to work, because in the end you have so much regulation and so much risk to manage and regulation to adhere to. If the tech doesn't work, or if you can't trust the tech provider, I guess it's a shameless plug that I can do for Lenvi. Right?
Go on, then.
It's we've got a whole ecosystem of products and solutions, and some of that are also, we're applying AI to the mortgage process already.
Okay.
So document processing and all these things. And given we've been established in the market, so we're a fintech, but we've been we're a trusted fintech, as in we've been in the market for a long time.
Yes.
Rebranded a couple of years ago to Lenvi. But we've seen it all as a team, and we've got a lot of experts within the team that work on this as well. So shameless plug there, obviously. I mean, still Fintech with Fries by Lenvi. I think one of the things that's interesting, so when we look at all of these different products and how that needs to flow seamlessly, both in the back end and the front end of the whole process, if you look at the mortgage lending life cycle, as you touched on some of these steps, it's happening. We see it happening. It might slow. Some bits might slow down. I think one of the interesting ones now in terms of the supply and demand. So taking one step back, it's all about houses, right? So first-time buyers need a house to buy. So then there might be a bit of a housing shortage. There might be, sorry, we're just on a podcast. I was like, sorry. Sorry, this is Money 2020, so you will have some interruptions and people coming to the stand. So the supply and demand. So is there enough supply of houses? I think I've heard different stats in the UK. There's a shortage of housing, but then other people would counter that and say, actually, no, there's not. There's a lot of houses that are owned by potentially elderly couples that are potentially in a house. So there's a later life mortgages, equity release, all of these things.
Yeah.
Equity release maybe in a certain period in your life is important. You've been working hard. There's all kinds of different things. You've bought a house. There's a lot of things that the cost of living has increased over the past few years. Now that's getting better, but still there might be debt that you carry. So equity release might be a good one to kind of cover the debt and then kind of release some equity from your house. But equally so the later in life mortgages and all of these different ones that are actually already emerging. As you say, there's some specialist lenders there, non-bank lenders. I think some of the banks do it as well. But how do you see this kind of just using the later in life? And again, it's a bit of a shameless plug. We've got a State of the Nation report coming out, so our head of content is working very hard on it. And one of these topics is the later in life. How do we do that? How do we see that work with technology in the back end? And it also increases the supply of housing. If an elderly couple actually doesn't want to live in a 4-bedroom house in London because all the kids have they're empty nesters, all the kids have moved out, they no longer need the space. How do you see kind of mortgage lenders, one with technology, the data, we talked about data, but there's a supply and demand data issue as well. There might be a lot of things that a person might well be an elderly couple might want to move into a 2-bedroom apartment somewhere central in London that is now not as affordable to a younger couple. And there's a younger couple who's going to have kids, and they want actually a 4-bedroom somewhere else. So, how do you see that happening? How do you think lenders and technology and partnerships within the ecosystem can solve that?
I think there's a lot of dimensions here.
And I've gone a bit off script, so that's why Julian has to think for a second.
It's okay.
Apologies.
It's all good. So we just completed some research and published a report on the building society sector. And as part of that research, we looked at the issues with home buying and home ownership, and we interviewed 60% of the chief execs of the 42 building societies in the UK, and we asked them which is the bigger issue, the supply of housing or the way people buy houses, and pretty much 100% said that the supply of housing is the biggest problem.
Okay.
And so, and it's going to come back to your later life lending point, by the way. I'm not.
No, it's fine.
I
saw the report. Hence the question.
Of course,
as well.
So we need more houses, which is widely reported, and it's widely reported that we probably can't build them as fast as the targets would suggest we need to. And that leads on to some lines of thought around, well, what about the existing housing stock? How do we repurpose it? How do we right size it? And in your example, I think you said, what if you've got an older couple who wants to sell their house to move into an apartment? Well, what if you've got an older couple who don't want to sell their house?
Yes, which is probably.
But it would be really helpful if they did. And the reason they might not want to sell it is because they're going to pay a load of stamp duty to buy a new house. Which is just eating into their wealth, and they're really mindful of their wealth for their later life living. Possibly for their future generations. The sort of transfer of wealth. So there's some barriers as to why people don't necessarily move to the house that's the right size for them. So there's that. There's definitely a trend for lending later into life, as we've already discussed. There are lenders that focus on later life lending. They're not necessarily equity release. Sometimes it's just sort of different criteria that is more appropriate for people that are borrowing later into their life. I think you've also got the challenge of how long it takes to buy a house. And that process is really inefficient. It takes a really long time. Is widely criticised. There's lots of research that shows how painful it is to buy a house. The OPDA has recently OPDA. Sorry, Maria. Has published some consumer research recently that sort of highlighted what a painful experience that is. So there's quite a lot of change and flow around making it easier to buy properties, making it simpler, digitizing property data, links to a lot of the things we've already talked about, like the data use and access bill, and how do we make it easier for people to get into houses faster and more efficiently, and minimize some of the bottlenecks. I think that's also part of the challenge there, which is not explicit to later life lending, but is a sort of more broader issue on the market.
I think we touched on a lot of points. We try always to keep these to about 30 minutes, but I think there's one more thing. So we might go over the 30 minutes a little bit, because there's one more thing. I think it's the flexibility, right? And I think it was kind of in your answer already. You need the regulator to work together with ecosystem partners, potentially like Fintech North, Whitecap Consulting, and then also with the lenders. Like there's a whole kind of thing. So I think that the affordability becomes a thing, but also the later in life that the other company not wanting to move out, given the barriers, given it takes long, given it might cost them a lot of money, and how can technology technology and data and access, if lenders were to work together a bit more. Have you seen this? Actually, let me rephrase this question as, have you seen kind of building societies potentially as part of the research that you've done? Are they working together already? You've got the BSA, obviously, that is in the UK, that works together, has all of the building societies there, but also with other lenders, whereby lenders or competitors essentially are working together to make sure that the access, that the process becomes easier, potentially working with different technology partners. Have you seen this kind of happen already, so that you can, one, You can address the. I think that's one of the points we didn't really address, but it's kind of covered, the vulnerable customers, because obviously that we talked a lot about the application stage, but then there's managing the mortgage as well. There might be points in time where you're under stress financially. If you're a vulnerable customer, or if you're not even a vulnerable customer, but you're still under stress and you can't pay your mortgage, and there's a lot of things. During COVID, that was a massive kind of global event. You had lenders that were very flexible. They payment holidays, all of these things. But when a massive global event doesn't happen, it might still mean that a personal event happens. All of this requires flexibility. I think that's the key point, and it's kind of the last question. Have you seen these partnerships emerge across the mortgage, kind of the UK mortgage sector, if you will?
So, I guess it depends how you look at it. I think a lot of lenders face the same. Well, lenders face the same challenges in terms of regulatory change. There are some things that are not competitive that they all just need to do, and then there are some things that are a bit more competitive, and it's a lot harder to get them to collaborate on. I think a really long-standing challenge is the sort of standardization of data. The getting integrations into some of the aggregation tools in the market, like the sourcing systems, CRM platforms, has been a challenge for as long as I can remember, really. So I think some of the tech platforms that are doing that sort of sourcing or related to sourcing, processing, origination, etc. Some of those systems are helping in that sense. I'm struggling for an example of like widespread lender collaboration, but I'm not surprised that nothing's coming to mind. I might just be forgetting something that I wish I'd said afterwards, but
that's fine.
I don't think so. Yeah.
Cool. I think that's it. Like we obviously on the scripture we obviously are lending tech provider, and we've got our servicing element, we've got our loan management platform. We do that in various verticals, including for mortgages. And one of the things that we see that some bits and pieces, it's better if you work with a lender and there's partners involved in that lending life cycle and kind of seamlessly working together. That's already kind of happening on the tech provider side. And I guess it's always interesting, this question of where does the onus lie, who's the responsible party. And I think that's very difficult to tackle, but I think it's happening, but maybe there's more that needs to be done. And UK Finance, I think, is another organization that brings a lot of lenders together, which I think is
and
good.
the BSA as well.
And the BSA as well, and Fintech North, bringing together fintechs and lenders and everyone else.
I think it's a really it's a complicated market. There are a lot of different stakeholders. Lots of the things that we've talked about today. We're involved in initiatives like the home buying process. We're working with PEXA, who are bringing a new solution to the market to help streamline property transaction process. Other people are doing things in that space as well. You've got we work with lenders on streamlining their origination through technology. You've then got the legal sector. You've got conveyancers.
Of course.
You've got the mortgage brokers. Everybody's trying to work smarter, work better, to be more successful. To give the consumers the better journey they can. Because that's the way that they're going to sell more of their products and services, as well.
Definitely.
So,
exactly.
It's a complicated market, and I think change isn't going to sort of happen quickly in the mortgage market, and that's just, I think that won't change.
So we do, and change is the only constant, right? So we all have to do our bit, and I think everyone's doing their bit. And I thank you very much for all of these great points. I think I want to give a bit of a call to action. Obviously, hit follow on the Lenvi page, but also hit follow on Fintech North, on Whitecap Consulting. And obviously, if you have any questions for Julian, feel free to hit him up on LinkedIn. He's quite active, as am I. You can always kind of get in touch with us. And I think that's almost it. We've gone a bit over time, but I think I'm happy with everything we discussed. And obviously, there's a lot to unpack. So there will be State of the Nation that Lenvi is coming out. I have a question. There is a question.
Oh yeah, there is.
There's one question so that we can answer. What strategies can the UK implement to retain top fintech talent and prevent brain drain to other global tech hubs? That's an interesting question, in the sense that obviously that's broader to the fintech. Do you have a view on this in terms of, obviously a lot of what we discussed today is related to talent and retaining talent within the UK as well.
I think thanks Ken for the question. We've only just seen it because we're on a full screen.
Yes.
But I think talent's one of the hot topics across all of fintech. The question is often like, how do we get more people working in fintech? How do we keep those people working in fintech?
Yeah.
So in terms of how we get more people working in fintech, we have to make it clearer what the fintech careers that are available are, how you get into them, what things might suit you depending on what your attributes or your your interests are. But your question is more about how do we keep those people in the UK. I think having a vibrant fintech sector, creating job opportunities, making it an exciting place to work in fintech, keeping this position that we've got through having a progressive regulator, as a global fintech hub. We just need to make it so that there's nowhere more exciting to work. There are some challenges in other areas as well around international workers, and how do we get the things like visa programs in the right place and make it easy for people to come and work here. And I think that's quite well documented and well discussed. So there's some regulatory change there, but overall we've been signposting careers and helping people build careers and giving them support and good jobs is key.
Definitely. I think there was one recent article about actually the job market in fintech, pulling kind of back towards being more vibrant. And I think that as a person that has worked in the UK in the fintech sector, I would always advise people it's an amazing sector to work with. If you're running around here at Money 2020, also that's the last call to action. Come find Fintech North. They're in Hall 5, just at the back by the startup hub. So, and there's a lot of startups around as well. There's a lot of talent around. There's a lot of UK talent around, and we will do our best to attract more talent towards the UK as well. But I've already been working in fintech in the UK, and I've followed the industry for about 10 years, and I can definitely recommend it. So that's my recommendation to answer the question. If not anything else, just follow my advice then. Thank you so much, everyone, and I think we are ready to go offline. If you're at Money 2020, enjoy. If you're looking forward to the next episode, Fintech with Fries episode 3 is coming up very, very soon. Thank you.
Thanks, Leah.
Thank you.